chain, you better cop a vest. You want the check, but can you make it stretch?
Welcome to Root Zones, bringing you the good news and the bad news of crypto. My name is Wayne.
And my name is Manish.
Now, if you like money in crypto, make sure to hit the subscribe button. So, guys, in this video today, we're going to cover a bit about Terra, Luna, the UST Meltdown. Before we actually get started, I'm going to play a video so you do understand what this is all about. Here's a great video.
How does Terra work? This is 1 Terra US dollar, or UST for short. It's a currency built on Terra's blockchain. The price of 1 UST is determined by how many people want it, and by how much UST is available. Let's imagine the entire Terra economy as a pool. The size of the pool is determined by the total supply of UST. If more people want UST, the tide rises, and if less people want UST, the tide falls. The height of the pool represents the value of each UST. If you can do more with UST, like buy coffee or invest in stocks, more people will want to buy UST, driving up its price. To bring back the water level to $1, we can expand the pool by introducing a new supply of UST. But where does new UST come from? At Terra, we've designed a machine that swaps $1 worth of Luna to 1 UST. Investors who predict UST will be more useful and used in the future can buy and hold Luna. When the value of UST rises above $1, any Luna holder can swap $1 worth of Luna for 1 UST and sell each UST for more than $1, making a profit. The newly introduced UST expands the pool, bringing its price back to the $1 peg. Now, Luna is more scarce and therefore more valuable. During times of contraction, any UST holder can profit by swapping UST for Luna, raising the price of 1 UST back to $1 US. As UST becomes more useful in the long run, Luna holders are rewarded for assuming the risk of short-term price volatility. So how exactly does the machine work? When Luna is swapped for UST, a certain percentage is burned, and the rest piles up in a community pool. From the other end, new UST is printed. This process is called seigniorage. As more applications are built using UST, massive demand will cause price to deviate above the $1 peg, meaning we need more Luna swapped for UST to expand supply. Meanwhile, Luna becomes more and more valuable, and the community pool accumulates more funds. The funds in the community pool are reinvested to build more apps that use UST, and the virtuous cycle of growth continues. Investors who hold Luna see its value rise during times of expansion, and if they choose to stake, earn transaction fees on UST. Even when demand for UST is low, Terra's algorithm automatically increases fees so that validators are always rewarded with a steady cash flow of UST. With Luna, you can do so much more than earn passive income. Luna holders can participate in Terra's governance process, proposing or voting for changes in transaction fees, seigniorage allocation, tax rate, and many more. Luna not only collateralizes UST, but also many more world currencies like Korean won and the IMF SDR on the Terra blockchain. Much like the moon, which stabilizes the Earth's rotation, Luna and its stakers are essential to Terra's stability. Join us on our mission to create a truly open and transparent monetary platform that no one controls, setting money free for billions worldwide.
Wow.
So
Very explanatory video, yeah.
Yeah, so they're using algorithmic. Basically what it means is just smart contract. So we'll cover this. So this is a house of cards was waiting to drop, and that's why they had a recent LFG put in place where they will use Bitcoin as a treasury to keep the peg to $1, right? The stability of this coin. So let's see what actually transpired. So in a nutshell, some key takeaways. This is basically their framework of how they actually mean is what the video actually covered. So they are always pegging to keeping that peg at $1, right? So it doesn't fluctuate, and then every time there's a a printout of USD. I mean, sorry, not USD, the Luna token. The algorithm will actually do the minting as well as the burning to keep the peg $1. So after a while, a long time as the thing scaled up and became bigger, they realized that they might have to have this thing called the defender mechanism, which will try to use BTC as a means to retain that peg status, right? So a key takeaway basically, what happened was that Binance actually halted Luna UST, right, withdrawal, citing about a high volume of the pending transaction, because there was everybody went into a panic mode when it spiraled down about 62 cents on Binance early Tuesday, while Luna crashed to $23, right? So that's an 80% drop. You can see the line here. Just try to actually put it for you guys to actually see the kind of impact it had. But it actually, in terms of the stable coin, it actually UST actually recovered in the last few hours. Now, the cryptocurrency community also had a mixed reaction on what has been one of the most dramatic events in the past few months in this space, right? So, of course, Binance, one of the top cryptocurrency exchange, actually halted this. Terra, Luna flagship stablecoin called UST, right? So Terra is the company run by Do Kwon. Quite a brilliant guy, I think. Looking at entrepreneurship is always trying to find ways to make this space a better place. But of course, there's a lot of naysayer when something happens, right? Especially people who are using Anchor Protocol to get that 20% APY. It was all connected to this entire ecosystem. So it plummeted to about 62 cents on Binance and then later recovered. So that is just what happened in a nutshell. But moving forward, we can see we need to actually understand how stable coins work. So in short, guys, in short, there's always two parts to stable coins. One is it's actually pegged to some collateral. It could be USD, basically your dollar can be pegged to gold, something on the physical that you can actually peg to, or the other one is smart contract. So in this case, that has happened was a breakdown in terms of the smart contract. So that is what was considered as a stress test on the stable coin, and only lost a fraction of a percent in the value, and the algorithms begin lifting its price back up to safe territory. But despite the dramatic catalyst on Monday, it wobbled again. And typically, stable coins should not wobble, but it actually dropped below that 98 cents before recovering midday. And this actually caused the mechanism behind the algorithms for the stable coin in terms of long-term prospect to be something that people will now be looking into, right? So there is no safe haven, guys. Most likely this is the reason why before the SEC goes into any other crypto space while they are fighting XRP, they were also looking at stablecoin. I think now the question in most of the investors' mind is how stable is the stablecoin. So there will be sanctions, maybe, who knows, regulations right now on the stablecoin. Is it really pegged? So in the case of USDC, not USDC. What's the other one? Tether.
USDT, yeah.
In the case of Tether, they claim that $1 is equal to one token that they have, and that's what it's really difficult to trace that because of the speed in which the market moves, right? So they are always under scrutiny, and that's why I think Do Kwon came up with this smart contract to ensure that it's basically manipulates the minting or printing, right, of tokens, and burning of the the supply and demand of that peg, to ensure that the peg always remains at that $1 mark. But I think later on, they discovered that they needed to purchase Bitcoin, which you can actually see on this screen. You can see that the defender mechanism was put in place to against Bitcoin as a treasury. And I think Do Kwon in his last tweet spoke about coming up with $10 billion worth of Bitcoin to actually stabilize this entire mechanism. Now, I don't know whether this is a foolproof mechanism. I think there's still more work to be done in this arena. And I don't think anybody has that solution now. So let us know in the comment section below, guys, what you think about stablecoin. Maybe you can give us some inputs or some links that, you can share with the community to better understand what is this all about and how we can actually use these, especially in terms of Anchor Protocol, which I'm interested in, 20 APY. We have also platforms like Bancor. But right now, myself and Manish, we are just using CoinHako, which is currently now based in Singapore. One of the fourth license, as Manish covered yesterday, that is granted by MAS, and there's a sense of safety there. So let's see. That's all I have, Manish. I'm going to hand over to you.
Yeah, so this arises a question: how stable is the stable coin? Because now the majority of trading is happening on the USDT, and then if something happened to USDT, what will be the crypto game? So
Yeah.
yeah,
So I don't know. I'm just thinking. I mean, we have so many fiat back up. This is mostly the Tether, and we have all these proxy standard US coin, Binance, USDC, Universal coin. So while they all claim to be stable, I think they fall into two buckets. Either it's backed up by some physical thing like gold or money, or they use smart contracts, and that smart contracts now seems to be very risky.
yeah.
Yeah. So that's all I have, Manish.
All right, okay, let's move on to the next section. So today we are going to cover about the three reasons to use a crypto trading bot. We have covered crypto trading bot in past, a couple of various crypto trading bot. I think we have covered about RoyalQ. We have covered about KuCoin bot and the Santa bot. So let's see what is the three main key reason to use crypto trading bot. So it believes that many of the cryptocurrencies will become a lot more popular in the year to come. If you want to venture into crypto and buy digital coins today, you can do so by using an app, a brokerage, or an exchange. The right one will depend on the available coins, investment strategies, or preference regarding where you want to stake your coins. So as you go along in the crypto journey, you might encounter trading bots. So what are trading bots? A quick glimpse: trading bots are a computer program that automatically trade cryptocurrency according to their parameters. So meaning to say that they are programmed to make a trade based on the specific trends. They can also let you test your different strategies for investing in a digital coin like a Bitcoin and any other coin. So plus they can also show you some historical data about the crypto trades and similar transactions. So what are the type of trading bots? Let's revisit that. There are a wide range of bots in the market. Some cost around a few buck to $100, hundred of dollars per month, but some are free. They are the type of trading bot you want to check out. So first one is arbitrage bot. One of the most popular type of trading bot is an arbitrage bot. Arbitrage bot can examine price across the exchange and make trade based on the price discrepancies. There are the high volatility of cryptocurrency in the market. You can automatically buy and sell on there, an opportunity to make gains. So return the arbitrage bots can be minimal. So the next one is the coin lending bot. So the type of bot let you lend coin to traders in the margin trading exchange as a loan, and they can return them to do the interest. Since it's automated, you can spend less time looking for the possible interest rate that help you to acquire better rates. The next one we have is trend trading bot. This type of bot is triggered by the momentum of a particular assets or trend before buying or selling cryptocurrency. So if a specific asset has a price increase, the bot will start in a long positions and vice versa. How does the bot works? Now that you have an idea of various type of trading bot and their functions, you might wonder how they are doing the job and crypto trading. So once the investor decided to use a bot, whether it's a free or paid, the investors can download the code of the trading bot from a developer. Each trading bot has the different requirement for the software that will run them, are even the hardware. So once you have done this, you should minimize the impact of a trading by setting up a proper account across digital currency exchange, and you can set up your APIs to do auto trading. So what are the benefit of using trading bots? So that's the topic which I just wanted to cover, because uh, many people use the bot, but the three key reasons which wanted to discuss why we should use the bot. So trading is not a walk in the park, but helpful tools like a trading bot can make it whole lot easier and manageable. So that's the thing. Continue. Let's find out what are the three main reasons which I talk about. They are efficient, since they are a specific program that they have to follow. Our trading bots are way more efficient than a human traders. There are some scenarios where the human manual way will not work out. The moment you try to sell it off or buy it off, the volatility is in so fraction of seconds, you will not be able to match the speed. So you are ensure that there are no trading delays or a human error. So that's the one reason they are efficient, and there will not be any human errors, and there will not be any delay. The next one, what we have is they can process bulk of data. So human traders can only process a specific limit of the data at a time. Even if you investors process all the data, it is still difficult to draw an insight based on its matter of time. So trading bots reacts quickly on any given circumstances, but still depend on their program. So sometimes it triggers on the event when the price goes certain level, the trading bot activated and buy it, and when the try reach certain threshold, it will sell it up. No manual intervention required. The third one, which I like the most, is they are emotionless. When we trading, our emotions works and we lose our money. So they are emotionless. A trading bot process a very decision based on the data presented logically. Unlikely human, they don't experience grief from a loss or greed from the profit. So in this case, the beginner traders, because they are often overpowered by the emotions, unlike experienced trades. So you can count on a trading bot to keep feeling out of the equation solely because they are not programmed to do that. So that's the three main reason we use the bot. And the closing thought: trading bots are great tools for starting more crypto journey. It helps grasp the fundamental of a cryptocurrencies more quickly due to its features like a simulation. So far we have used the best trading bot is RoyalQ. We have a uh, during the bull run we have made good profit also by doing this trading. And if you want to check out the RoyalQ videos, it's there in our playlist. You can check out how to configure it, how it works, and what are the different strategies, which all we have covered in our previous videos. And we have also covered AME with one of the experts. You can check out our playlist. So I'll hand over to Wayne for the next sections.
Yeah, thanks, Manish. Let me just share my screen, guys. So, of course, crypto space right now, Fear and Greed Index, number 10, one of the best numbers that we always look forward
Oh
to.
my
Yeah.
God.
So, this is a time where I take out bag of cash in our treasury, myself and Manish, and when we start to look out for things to actually buy, right? So, extreme fear can be a sign of buying opportunity. When investor gets greedy, it's time to run, right? So, of course, this measures volatility, market momentum, dominance, and trends, right? So looking at this today, really good time. The last time we had that was in January 2022, early this year. So 5 months later, we are back in extreme fear. Today, of course, it's a mixed bag of things. Markets are down, guys. Top 10 coins, of course, are based on LunarCrush. We have Zilliqa, Polygon, Flow Maker, Elron, Hex, Looks Rare, Shiba Inu, Wi-Fi, GMX4, and Cardano in 10th place, right? Looking at today, we are 19,000 cryptos, right? So 5% only of the 19,000 typically range between 5 to 8% makes it if they are innovations, if they are market leaders. So these are things that you look forward to. The rest, guys, mostly are copycats with a different marketing spin to it. So be careful when you are trading. Market cap right now is at 1.4 trillion. We are very close to hitting 1.3, which was slightly exactly in somewhere in May in 2021 when we first started this channel. It's almost coming to a year now. So volume, of course, has increased today. Of course, we have BTC and Ethereum takes about 60% of the market share. So top trending, of course, is Terra USDT with a together with Terra Luna. These two are trending right now. Of course, one of the biggest, drop 80% over a period of time. Bitcoin last 24 hours slightly down by 4.66. Right, good time to get into Bitcoin. Again, not financial advice, guys. Still have to do your research. This is just more for education purpose. Right, Ethereum 1.2, BNB down by 2.44, XRP down by 3%, Solana down by 1.42, Cardano slightly up by 0.27. I can't believe Cardano is at 60 cents. My gosh. And yeah, so the rest of the coins are all mostly stable. So it looks like people are finding stable coins to, to take off the heat and find ways to actually get an APY working on them. So again, if you look at the charts, so this was Terra Luna. I just took a look at this. These drops, the highest was at 5th of April, just maybe 5 days ago, guys. 5 days ago. And
this
then
usually happen when you have a rug pulls.
Yeah, yes, correct. This usually happens when you have a rug pull. This was not a rug pull. This was a systemic ecosystem failure based on the smart contracts, right? And most likely they knew it, but today maybe, who knows? The SEC will start to look into the actual stability, as what Manish has pointed out. So massive selling happening right now. Can you imagine? Luna was at $120 today. It is at $29, guys. $19, and today you can get it for $29, right? If you believe that Do Kwon will come back, as all projects come back, they will find a way out. But massive selling, I think sales went up to about 80 million in just a single day today. The sell-off was started from yesterday, and you can see the market momentum. Money is pouring out from this crazy, right? So everything is down, guys. Of course, slightly looks like it's almost recovering. I'm just going to put this at, the markets are not recovering. So if you see something like this, most likely at a $1.3 trillion, you just take a group of whales to come in and start to manipulate the markets. So find the right price, buy, do the dollar cost average. These are timeless wisdoms that stood the test of time. We are actually looking at Bitcoin right now. The next drop could be around the 24,000 mark, slightly up today a bit. But this is times where we look at a few parameters. You have the Bollinger, right? The blue line. So this is where we will come in. You have a EMA 20 against the 140 days moving average. So again, it is down. You can see red color, mostly sell-off has happened. Buyers also have come back in. Money is flowing out. Momentum on the MACD is also flowing out. So when I see all the stars align, this is where I actually buy a bag. So again, if you have $10,000, you don't go and dump $10,000 into Bitcoin. You always have to remember your portfolio, which is very important. Yeah, I know it can be greedy to actually get something that is cheap, but keep it to 50, 25, 25 as always. So while everything looks green right now, don't be fooled, guys. Don't be fooled. So stay safe out there. I'm going to hand over to Manish for the tweet of the day.
Yeah, thanks, Wayne. I think you have covered it already for this, but there is a tweet coming from Binance where they have hold on the withdrawal on Terra network Luna temporarily suspended. So the guys who's planning to take out withdrawal the Terra Luna, will not work on the Binance platform. So that's all for today, and see you guys tomorrow. Till then, take care. Bye-bye.
Take care, guys. Bye.
Diamonds on your neck, bet they on your neck. You want that watch, you better rock it tech. You want the chain, you better cop a vest. You want the check, but can you make it stretch?